I mean, the bond space is very, very easy to understand if you hold a bond to maturity, because then it's simple. You give them a million rand, you get 70,000 rand, let's say a year, and at the end of the 6 years, you get your million rand back. But it gets a little trickier when you want to sell your bond in between that period. And then the price in the market may dictate that. So as an example, at the beginning of March this year, when the pandemic hit, we saw yields as high as 12% on those 6-year government bonds. And if you were holding them prior to that, you had seen bond yields move about 3%. That was an 18% loss almost in that bond price. So if you sold it there, you would have locked in that loss. But if you held your bond to maturity, you get your principal back. So those are all the dynamics that you need to think about. If we looked at where bond yields are today, we currently have the steepest bond yield in 30 years. So all that means is that longer term rates are much higher than shorter term rates. The highest difference we've seen in over 30 years. That means there's more value going out further, but it also means that those longer term bonds are pricing in a bit more risk. Obviously, that's what is being reflected in the market. So be aware of where you're at, understand the volatility of the bond market, and if we looked at where bond yields are today, I would tend to go to the 6-odd-year space. I think we're going to be safe over that period. And I think the yield that you're getting there is exceptionally well. If you go out longer, you must understand the volatility that you're entering into.